Hello friends, today let's dig into KRBL Ltd, the company behind India Gate Rice and the biggest Basmati exporter in the country. Let's start with sales. 10 years ago, KRBL sales were 2,882 crores. Today, that is 5,979 crores, more than double. So, over a decade, sales grew at about 6% per year. Looking short term, the last 3 years were better. Sales grew 10% per year. No wild swings, but a steady uptrend, reliable progress, even in tough years. Next up, expenses. KRBL's expenses keep pace, moving from 2,441 crores 10 years ago to 5,245 crores now. Material costs dominate 69 to 79%. Manufacturing is 6 to 9%. Employees just 2 to 3%. And other costs usually 3 to 5%. This lean cost structure helps KRBL keep margins predictable, even when crop prices or exports shift. Let's look at operating profit. Operating profit grew from 441 crores 10 years back to 734 crores this year. The operating profit margin is 12% now, usually lands between 12 to 24% most years. That means for every 100 rupees, KRBL earns about 12 rupees is left after all direct costs. Not the highest among FMCG, but strong and steady for bulk agriculture. Now, the net profit, the actual money left for owners. Net profit went from 255 crores to 540 crores. So, a little more than doubling, or 4% CAGR per year over 10 years. But 11% per year for 3 years, and a solid 11% jump this latest year. Net profit margin remains stable, around 9% in most years. EPS grew from 10.84 rupees to 23.6 rupees over 10 years, meaning consistent value per share. Dividend payout rate is 11 to 18% of profits, and the latest dividend yield is 0.78%, modest, but always on offer. Return on equity is 15% over the decade, now at 9%. ROCE is 11.8% lately. These are decent numbers for a business dependent on farm cycles and export markets. Debt to equity is low at 0.08. KRBL runs with minimal borrowings. So, overall, KRBL is a classic example of stable, slow compounding. There are no wild jumps, no big collapses, just year after year building as India's rice exports grow and the India Gate brand stays strong. Costs rise and fall with crop prices, but their large scale keeps profit consistent. If you like businesses with simple models, low debt, and a trusted brand, KRBL is worth watching for long-term wealth building. If you found this video helpful, subscribe and let me know which company you want to hear about next. See you at Well Growth Club.